live. Hello, Rebecca Steinhaus here with Remax Services. We're back for your second episode of Cross Country Conversations with Craig Stelzer of Cross Country Mortgage. And we had some great feedback from our last interview last week. So like I said, we're going to keep doing this every Thursday around lunchtime. So Craig, how you been?
Hey, Rebecca.
You been
Thanks
good?
for having me.
You're very nice to have you back. We got some new questions this week. One of our biggest question we got is what to look for in a property that could impact a buyer's ability to get financed.
Great question. We spend a lot of time answering that specific question in our world. So specifically, what that question was is asking what in a property could stop someone's loan from going through, and it's a twofold question. It's what could come up on an inspection, what could come up on an appraisal, and then from there, how that impacts the loan and or insurance, which could then impact the loan. And so, generally speaking, the realtor is going to be the first line of defense. And so in your travels, when you're listing a property, or if you're showing a property, it's a good idea to do a real visual of the property, walk the perimeter of the property, look for signs of cracking, termites, roof tiles missing, any kind of peeling paint if it's a FHA loan, and I'll go through that in more detail. And inside the house, you definitely want to walk around and look up. And the point of that is looking for water spots, looking for yellow marks, stains, signs of an active roof leak. You want to look at the walls and look and see if there's any mold spores or things that might need to be treated before that house goes to market, right? So if you're on the list side of a deal and you notice some of those things, that would be the time to talk to your seller about it and maybe get an expert in, a roof expert, because you're going to have to disclose that stuff later on. And so it's better to get ahead of it, in my experience, and I'm sure you would all agree. So let's talk about inspection stuff first.
Yeah, that's where I was going to go.
Right, so let's say you've walked the property, you're on the buy side or the list side, and you have your inspector out there, and they mention to you, or they see that wet spot on the ceiling. What's going to happen? They're going to immediately, they're going to mark in their report signs of an active roof leak. And the chain reaction of that is going to be the buyer's going to need, you're going to need to get a roofer out to the house and see if it's a replacement that's needed or just a repair. Generally, from a loan standpoint, if we know that there's signs of a potential roof leak, we're going to need a clear roof cert. So once that roofer goes back out and indicates that that's an old roof issue that's since been remedied, that's sufficient for a mortgage. Okay, if the roof leak is active, that's going to have to get remedied before we can close. Okay, otherwise we can do in separate, one of the solutions that we use a lot of is an escrow holdback. And so for the most part, we'll do an escrow holdback so long as the work, whatever it is going to be done within a few weeks of closing, and the house is habitable and it's not a major safety issue. Okay, so we can't have a lot of exposed wiring. We can't have a empty pool in the backyard. If the pool's not working and the pool is empty, it's going to need to be covered, right? So there's not a giant hole in the backyard, right? So I would say roofs are the major thing that comes up in inspections that derail deals, simply because of the price tag. Most other things that come up on inspections are workable if they're not, because they're generally speaking, they're not going to be a $20,000 or $30,000 roof. It might be at worst case an AC, which is $5,000 or $6,000, or maybe some plumbing work or an electrical panel, things like that, right? So a lot of things will come up on inspections that may not necessarily come up on an appraisal. And so a lot of people will opt to get through inspection until the appraisal to see what comes up before they do repairs, right? So
Always do that inspection.
yeah, so you know, the inspection obviously are going to be a lot nitpickier than an appraisal. Michelle?
Hey, Michelle.
Hi.
Want to make a guest appearance?
Sure. Are we doing live?
Yeah, we're live.
Live.
We are live.
Hey guys.
We're all the way
hold
over
on.
here. Yeah, come
I'll
back
come in
over.
this way. You never know what's going to happen at Remax Services here.
Never
in
know.
You may have a guest appearance by someone who just kind of happens to walk by.
There you go. You look like you've done this
So-
before.
I have burning buyer mortgage questions.
Do you have a question? We're talking about what to look for in a property that can impact the ability to get financed.
Oh, well, I've
Inspection
got a
stuff
good
that comes up,
question.
appraisal
Okay.
May I
comes up.
ask?
Yeah.
All right. If a property has a roof that has no life left,
Mhm.
what kind of loan is available
Mhm.
to the buyer? And they typically have to take a hit on their insurance
Mhm.
before they, put the new roof on.
Yeah,
Anything
so-
out there?
Yep, you've got a couple different
Yeah,
solutions.
that's a good question.
Yeah, it is
Yep,
a good
great
question. Because
question.
we were just talking about the roof
Great
issue
question.
too.
Ugh.
Yeah.
So the roof shot, they can't get insured. Buyer still wants to buy the house. Seller's unwilling to replace the roof. That's the scenario.
It's a good
Right.
scenario. Well, I'm seeing a lot of it. That's
Of course.
the thing.
So if the buyer is willing to buy the home,
Yeah.
knows they have to replace the roof right afterwards, you could do an escrow holdback at closing, where the buyer escrows 1.5 times the invoice amount
Right.
of the roof work,
Right.
and then the title company will release those funds to the vendor after
Okay.
the work is done.
Okay.
It's going to happen within a few weeks.
Okay.
A buyer can do a reno loan. They can
Yeah.
do a renovation loan. Conventional buyers can do what's called a home style renovation.
Got it.
FHA buyers can do a 203K.
Yep.
If they're going to do the work afterwards, a lot of times you can close with what's called a builder's risk insurance policy.
Mm-hmm.
So if the lender's unaware of it and the buyer's willing to go through it and
Right.
the appraisal doesn't flag it, they can get a temporary insurance policy and do the work right
So
afterwards also.
you just said something that's very key. If
Mhm.
the appraiser
Correct.
doesn't flag it. So if the appraiser flags it, then what happens?
If the appraiser flags it, it's got to either be an escrow holdback, a seller escrow holdback, a buyer escrow holdback,
Yeah.
something, or a renovation loan.
Okay.
If we know about it, if the lender's made aware of a roof issue, a roof replacement,
Yes.
that's an insurance issue,
Right.
and it's going to be a loan issue.
Right.
So we do escrow holdbacks all the time.
Yeah.
As long as we know the work is going to be done, a lot of times we want to see that the vendor's already been hired, maybe the permit's already been pulled.
Yeah.
Right?
Yeah. Because it takes a little while to get that.
Yeah, so as a lender, we hold those loans on our warehouse line,
Okay.
and so we're paying interest on the loan, and so generally we want to make sure that work's going to be done, and we also don't want to lend on a house that's not habitable.
Right. Exactly. Well, thanks so much. That was great.
Thank
Good
you,
advice.
Michelle.
Thanks for letting me jump in.
Thank God I knew
I
the
know,
answer.
right? I know.
Right.
Listen, I wouldn't ask you something you didn't know. That would be very nice. All right, guys. Thanks.
Thanks,
I'm
Michelle.
gonna tiptoe out of here.
Yeah,
I'm gonna get
try
my
all
light.
the wires
Oh,
and
God.
lighting.
Here we go. Tipping through.
Bye.
Bye.
Good job.
Thanks.
You know, so Michelle asked a great question. That is a real scenario that I deal with all the time. Okay, so if you have a roof issue, there's a couple of different solutions, so long as the buyer is willing to do one of those, right? Or if the seller is willing to fix it, of course, that works. And you're working with a lender that's okay with escrow holdbacks, because not everyone is. Okay?
Very important.
Now,
There's more.
there's more. Oh, wait. There's more.
Hi, Dan.
Right? Insurance has a big impact on financing, and so in Florida, you run into electrical panels that are fire hazards. There's specific ones called Federal Pacific, a couple others that are outdated and they're fire hazards. Generally speaking, it can cost up to, let's say, $2,000 to swap out an electrical panel. Again, shouldn't be a deal killer if you're working with an insurance agent that knows their products and perhaps has carriers that don't need a 4-point inspection, or they have time to submit the 4-point inspection. Of course, it's always best if the seller just fixes the problem. The seller's made aware that they have a fire hazard electrical panel. You would think that they would want to swap that out,
You'd think.
right? But if they're not, again, if the house is not insurable, you can do an escrow holdback until the work is done. If the house
Do you mind explaining an escrow holdback?
So an escrow holdback
Any
is
of our viewers
basically
don't know?
the title company and the lender agree to escrow funds required to cure the issue at hand. So if it's a $2,000, I can speak for Cross Country's policy. Cross Country policy on an escrow holdback is we require 2 invoices. So you need 2 licensed contractors, and we'll escrow holdback. We'll hold back the funds required to fix the highest invoice, and we'll increase it by 50%. So if it's a $2,000 item, we escrow hold back $3,000. Okay, and so the title company.
So the escrow is pretty much kind of covering
Correct.
anything that needs to be fixed.
Correct, and depending on if
To
those
get
funds
financed.
came from buyer or came from seller,
Uh-huh.
once the work is done and they can prove that it's done, the title company releases those funds back to whoever.
Gotcha.
They pay the invoice first in case there's an overage,
Got it.
and then they release the difference back to the buyer or
Gotcha.
seller. So we're basically just, everyone's in agreement that they want to close with the known issue. Everyone acknowledges the issue. We know that the work's going to be
escrow's
done.
gonna cover it.
The escrow is going to cover it. So the buyer and the seller aren't responsible for paying the vendor directly.
Got it.
The third-party title company is responsible for dispersing those funds,
Gotcha.
right? And everything gets done.
And so that way they can get around this
Correct.
and get financed.
Correct.
Cool. So credit wise?
Yeah, so a lot of times an inspection will come up with some items that wouldn't show up on an appraisal per se, or maybe there's some issues that wouldn't derail financing, but there's still things that need to be done. And so buyer and seller will agree that the seller is just going to credit a buyer towards closing costs.
Okay. Got
I get
it.
this question all the time, how should we write up the credit? A lot of times when people don't ask me, I'll wind up with an addendum that says, seller agrees to credit buyer $5,000 towards their repairs from the inspection. That's
Gotcha.
a major no-no, right? You never want to put in the addendum anything other than seller agrees to credit buyer towards buyer's closing costs and prepaid items.
Oh.
Because if a lender's tipped off that there's repairs, we're going to ask more questions, which are, what are these repairs? Do these repairs affect financing? Are they going to get remedied before closing? Do they affect the habitability of the home? Right?
So if somebody is looking at a home that obviously is going to need work, that's going to be harder to finance.
It's a good question. So, again, it depends on the extent of the work. So, if it doesn't affect safety, it's just, let's say you find a house that just needs a facelift.
Right.
But it's totally habitable. It's just
Right.
not to your liking. That's no
Aesthetics.
problem.
Got it.
And depending on the type of the financing, like conventional mortgage is going to be less nitpicky. If the house is in rough shape, if it's beat up, if there's
If it
holes
has
in the wall,
mold.
mold, that's going to have an issue with any type of loan.
Oh.
But if the place is just old, or the place just needs some TLC,
Yeah.
you shouldn't have an issue.
You need Joanna and
Appraisers aren't inspectors. They're going to walk through the home. They're going to mark known safety issues. They're going to mark things that are sort of unavoidable, you know, like the
Gotcha.
wet spot on the ceiling. They've got to mark that.
Yeah.
Right? Because that's
a leak
their,
coming from somewhere. You got to figure that out.
yeah, and it's their license on the line. So, you know, it's not
Excuse me,
realistic.
guys.
Okay?
Yeah, I'm just getting better here.
Water. So, yeah, when you're buying a property that just needs some upgrades, depending on how rough of a shape the place is in, impacts the type of loan you can get. There are renovation loans, right? So if you buy a
Right.
place that does legitimately need work, or a better
We
example,
talked about that last week, the renovation.
yeah,
loans.
like if somebody's buying a place and can't self-fund their own renovations, that's not an option. So you buy a place, you're limited in your down payment availability. A renovation loan is perfect for you because you can finance your upgrades.
Gotcha. Yes.
Right, but generally
But
speaking,
if
like I
it's like
said last
something that's
week,
going to affect the safety, that's
gotta
going to
be
affect
addressed.
the financing.
correct, it's
Got
got to be
it.
addressed.
Okay, that makes sense.
FHA, conventional jumbo loans, VA loans have different things that have to get marked in appraisals.
Okay.
So conventional loan versus a government-backed loan, which is an FHA or a VA. Conventional loan is not going to mention nitpicky cosmetic stuff.
Okay.
So conventional loans, appraisals are going to be less worried about, say, like a peeling paint or perhaps even a cracked window.
Okay.
You know, just minor cosmetic stuff. It's not a safety issue, right? They're not required to mark that as items that need to be repaired prior to closing.
Just conventional, did we say, or all of them?
Conventional.
Conventional only. Okay.
FHA and VA are always going to be more rigid and nitpicky. Yeah,
Oh,
they're
wow.
going to mention or flag things. I've had VAs where there's a light outside the house.
And it's out?
And the light was cracked.
Oh.
And they marked it.
Oh my God.
I mean, it's very veteran friendly.
Yeah.
So it's, you can't even get mad as a lender. You're happy for the veteran. They're going to get everything fixed.
Yeah.
But that kind of stuff, again, when you walk a home for your buyer or as a listing agent, if you're listing a property, you got to know that if you have a VA buyer, some of that stuff's going to be addressed.
Perfect.
Sure. It's going to be more
Gotcha.
nitpicky.
Well, most sellers do like to get their home ready to sell.
Of course.
So hopefully their paint isn't peeling or their light isn't cracked. But there are those homes that don't look as pristine as others. So
yeah, generally speaking, better, and it's better to set the right expectations and let people know what they could be up against. I think.
Right.
So that. You've got escrow holdbacks, you've got credits, you can simply fix the problems. You've got
credit for fixing the problem in the addendum.
Credit should be ambiguous. Credit should be seller credit towards buyer's closing costs and prepaids.
Got it.
That's the cleanest way. Okay? And insurance, can't stress it enough, got to have a good insurance person. The insurance agent has to explain the different options to a buyer. If you've got a good insurance agent, just like a good mortgage person, they know how to navigate through things. If the buyer is aware of things and wants to move forward, right? That's another key, right? You never want to your insurance person and your lender should always, when they're being creative, the buyer needs to know, right? The buyer needs to be a willing participant in what plan you're putting together for them so that, they know what they're going to get to.
I have a question regarding this. We're in hurricane season, let's say, hypothetically, and you're getting a closing October 3rd, and the hurricane comes October 4th, and now that house may lose its roof. Now that could affect the ability to get financed, right? Yeah,
the effective date of that happens a lot, and that happened a lot last year.
Yeah.
So your policy is effective the date that you close. That's
your
when you have
policy.
an insurance policy and you have a closing, the effective date of the policy is the day that you close.
So the sellers at that point would have to cover it?
No, buyer. If the buyer owns the house, it's a buyer issue. If the seller owns the house, it's a seller issue. So if the damage happened on October 4th
and the closing was the 3rd,
it's a buyer. If the closing's on the 4th and the hurricane's on the 3rd, it's a seller issue.
Okay. Yes.
Right?
Yeah.
So that's
then they would have to fix that before they got financed.
Yeah, and an important point, a lot of buyers' natures is to underinsure. I talk to people all the time.
Because they want to save money.
They want to save money, or maybe they own their other house without a mortgage and they're not used to paying for insurance and they're just, anti-insurance. A lot of people are like that.
Yeah.
Just like in Broward County, a lot of, buyers that have the option don't want title insurance. Nobody ever thinks about the what if. I've seen every what if there is. Like I've seen it. I've seen what happens. And and so, I don't want to say that I'm bullish insurance. I'm not a advocate for over-insuring per se, but I'm definitely not an advocate for under-insuring. You should have the right amount of insurance. There's a lot of people that got hurt in the Keys. There's a lot of people where they were under-insured and didn't have the right coverage. I know someone personally that had a really expensive house that they grossly under-insured because they didn't want to pay the insurance.
Oh, no.
It's going to cost them a lot of money to rebuild their house. So,
oh, no.
It's,
especially in Florida, definitely insure.
Yeah, and so...
And if you're in a flood zone, you have to get that flood insurance, right?
Yeah, a lot of Florida is not in a flood zone. It costs you maybe $400 to get a flood policy for $250,000 worth of coverage. Even if you're not in a flood zone, it's a good idea to get one.
Yeah. Because we know sometimes we get those flash flood warnings.
Yeah,
you never know what'll happen.
Yeah, and a lot of mortgage people and a lot of insurance people will underinsure strategically to help somebody qualify, which has a purpose, but you have to get the right amount of insurance afterwards. And
Gotcha.
We see that a lot too. And so, insurance it's necessary evil, but it serves a purpose and it ties into the mortgage, and you have to have a really competent insurance person to be able to explain options to people, right? Just like on a mortgage, it goes hand in hand.
Got it. Is there anything else we should know before trying to get financed with a house that may not get financed?
Just when in doubt, call Craig.
When in doubt, call Craig.
We'll know how to work through it.
I think that's everything we have for today. So if you want to know something else about mortgage, please comment below, and we will be sure to answer all your mortgage questions. Please tune in next week for episode 3 of Cross Country Conversations with Craig Seltzer. And also tune in tomorrow for our Remax Awards. Will you be joining us for Remax Awards breakfast?
Yes.
We will be having our 2018 Remax Awards breakfast live on Facebook to congratulate and enjoy our agents and thank all our agents for all their accomplishments this year. So have a great Thursday and bye.